Hello, greetings and welcome to our new Facebook Live session. I'm Anna from Project RH. We are investment specialists connecting the world, and we connect projects and money. Today, we will talk about venture capital funds for investment and development, an Australian experience that everybody wants to participate in. Our special guest is our strategic ally, Graham Kinder from River Gold Capital. Hello, Graham. How are you tonight?
Anna, good morning. It's lovely to, or good evening where you are. It's lovely to be with you, and we look forward to spending the next little while to, exactly as you say, have a look at venture capital and some of the really exciting things that are happening here in Australia with in the venture capital area.
Yeah, thank you. Could you please start put into context, our chat? Can you tell everybody a little bit about yourself?
Sure. So my background is largely in financial services sector, where I've worked in Australia in a whole range of investment management roles with our larger banks and insurance companies as a consultant and advisor to assist them in trying to set up investment portfolios that will provide good, strong, long-term returns for investors. And more recently, we've been looking to work in the area of assisting new enterprises and innovation businesses to find the funding so they also can be successful in Australia. This is an area of great interest to me because it also allows people who want to move to Australia to establish new businesses in a really exciting business environment.
Okay, so let's get to it. The
Sure.
first big question is, what are venture capital funds?
And look, it is really.
But first, maybe go back first. What is venture capital for people like me that
Yes, look, there's a range of different definitions that are available out there, and people get quite pedantic about what fits into what area. So look, bottom line, venture capital is investment money that is available from an investor who's prepared to put a placement to support a fairly new or early stage business. So early stage businesses are not yet proven. They don't yet have consistent profit streams. So the venture capitalist is taking a measured but a known risk in the type of business that he's investing in. This differs very much to people who are happy to invest in mature or long-term businesses. But venture capital is an equity or a share type investment. It is not a loan. So it's specifically an equity or shareholding in a company to provide it with new money so that it can grow its new business opportunity or innovation.
Okay.
Does that make
sense? Yeah, it makes absolutely sense. And the venture is like an adventure, and it's a risk, of course. What are the sources of venture capital?
There are lots and lots of different sources, and it goes a little bit back to our definition. Venture capital, as I say, is any capital that is coming into a new enterprise or a new business to help it get established and get growing. So in that context, venture capital can come from anyone who is prepared to place an investment. It can come from an individual, it can come from somebody's family and friends, but usually that sort of investment is given different descriptions, different names. They call that an angel investment, say from a high net worth individual who wants to support an early stage company, is often called an angel investor. It's still a form of venture capital. So if we look at more technical definitions, venture capital tends to be capital that's coming from an institution or an established fund. So a particular investment pool that's set up specifically to support a range of new or innovative businesses to get established. So venture capital more commonly is that sort of pooled type investment.
Okay. So why raise venture capital? What are the advantages?
Sure. Look, if somebody's starting a new business, obviously they can secure, as we said, money from a high net worth individual or from family and friends. Another area that people can get money is to borrow money. If you're borrowing money, you must repay the money. There's an obligation to repay it. Now, with venture capital, it's quite different. People are making a calculated, if you like, gamble, but a bet on whether your business is going to be successful. So they will study the documents that you have provided, and your business should succeed if you've set up a good business plan. But if it does not succeed, there is no obligation, no requirement to pay back the money that was invested, because it's known to be a riskier type investment. So that's a great advantage compared with borrowing money. People will often borrow money by taking a loan against their home or some other large asset, or an asset of their family, their parents. And if for whatever reason the business does not succeed, then we're in the very sad position where people's homes are sold, and that's what we want to try and avoid. So venture capital is a much better solution.
Of course. Okay. Let's go to the funds now. What is a venture capital fund, and do they operate across state borders or internationally? How is that concept?
Thanks. And so a venture capital fund is simply a pool of investments where a whole range of investors have come together to raise money, and they all understand the type of investment that they are going to be exposed to with their investment. Okay. So that's a venture capital fund. Now, each fund is raised with its own, it can set its own rules as when it invites people to invest. So a venture capital fund can be established specifically to invest internationally. So we have venture capital funds here in Australia that only invest outside of Australia. Okay. But similarly, there are venture capital funds in Europe and the United Kingdom, in New Zealand, across Asia, that only invest into Australia. And they create pools of money that people can apply to see if they're happy to support those businesses. So they definitely operate internationally. They also operate in Australia. We allow businesses to operate across the entire country. So you can establish a business in Sydney, but you can have a branch in any of our other states, in any major capital city or reach. So totally operate across borders. And the investment funds, the venture capital funds, fully support that.
Okay. Are they graded or regulated according to the risk? Because it is, I suppose that depends on the business or the type of investment. It'll have a different risk.
So yes, each venture capital fund will let its investors know the type of investments, and if you like, the type of risk that they're prepared to invest the fund in. But there is not a regulation that requires people to rank risk or a risk rating or something like that. These are simply evaluations that are made by the professional fund manager. So some people will say they only are happy to invest, for example, in enterprises that are investing in medical science, because they know and understand that. So they understand the risk and they can manage the risk. Or maybe it's financial services technology, we call fintech. And so the investment manager will know and understand the fintech sector and can explain that to his investors. So it's not a formal ranking, but it's clearly explained before the investor places their money.
Okay, so that would mean that maybe there are special sources for venture capital for different types of projects, like focused on what you're saying, fintech, biosciences, technology.
Look, certainly those funds do exist, where they make it very clear to the investor that if you invest in our fund, we will only place your money in health services or biotechnology or fintech. And those funds do exist, and some of them are quite substantial funds. But Anna, importantly, there are also funds available that say that they can allow an investor to place the money in a complying government-regulated fund that will in turn invest specifically into a known business. Oh. So an investor can elect to choose, I just wish to invest in a particular project. Mm-hmm. And that project may in fact link beautifully with, say, a visa applicant's intention to build a business, so that an investor can choose, in effect, to support a single visa applicant.
Okay, so it's getting a little bit into our subject. When should a business raise venture capital, and at what stage?
Thanks. Venture capital by its very nature is typically fairly early stage, but most businesses, the founder, the person who is setting up the business, needs to have a little bit of very, very early, what we call seed capital. Usually that's their own money, so that they've got enough money to say, look, I can explore my business idea and I've got enough capital to get some professional support in terms of helping me build a proper business plan. That's a skill set all in itself. And so to apply for venture capital, you really need to have a really solid business plan. You need to have a clear understanding, some research about the sort of business that you're setting up, because the venture capitalists will want to see that sort of information. So a little bit of seed capital you need to raise yourself. But after that, once the business plans and documentation's in place, that's the right stage to start to look for a venture capital support.
Okay, so you mentioned business plans last week on our live session last week or the week before. We talked about business plans and the importance, what you're saying for the whole development of the business. And so maybe some of you would like to check it out. It's somewhere in our Facebook page. But getting back to business, what are the disadvantages of venture capital from an individual or venture capital from a fund? How does it work?
Okay, so look, raising venture capital from those two sources, we'll firstly talk about from an individual. Usually an individual investor, the disadvantage is that they will often wish to have a material role in the running of the business. They will want to see where their money is going. Now, for a lot of people, that's fine, because maybe that's a family member or somebody who's supporting them and they get on very well. But a disadvantage can be that the investor will want to start doing your job for you and running your business for you. So you need very clearly at the outset to, if you like, set the ground rules about how you're going to work together with your investor. If you do that, using an individual investor can be good, but the disadvantage is the control issue. The disadvantage from a fund point of view, and we strongly recommend people use a fund, but a clear disadvantage is the fund is going to take equity, take a share of the business, and usually the level of that share is quite high. People will need to be very realistic when they're setting up a business. We know people say, look, it's my idea and I've put in all of the seed, the very early capital, and without me it won't work, and so I should have 99% ownership of the company. But a venture capitalist will look to take 30 or 40 or 50% equity in the company, certainly until the company's up and rolling. So that's a disadvantage, is you need to be prepared to give away a big chunk of the business to secure the investor.
But then there's also a big risk for them, so.
Absolutely, there's a big risk. And again, one of the things you can do with a good investor or a good venture capital fund is that you can arrange the terms of the investment so that as you achieve success, you can earn back more of your own equity in the company. So the venture capitalist is very happy usually, to have a decreasing share in a rapidly growing company. He's there because he saw the potential for strong growth. He's very happy to just enjoy profit, even if that means a smaller shareholding.
Okay. What do venture capital companies look for when investing in business?
Okay. Again, it's a really good question. Venture capitalists are usually looking for something that is the business concept that you have to have needs to be new, needs to be innovative. It needs to be something that's, we hear a lot of the terminology of a disruptor concept, something that's going to change the way that people buy or sell or trade or interact with one another. This is the kind of innovation that venture capitalists are looking for, because if it's successful, it can enjoy dynamic growth. That's what a venture capitalist is looking to achieve. But having done that, it's having identified a new or innovative or disruptive concept for the business will only be successful if there's a big market. So the venture capitalist is looking to say, how big is the marketplace? You can come up with a brilliant idea, but there's only 2 or 3 maybe governments on earth would be interested in investing in it. This is not what a venture capitalist is after. And if you come up with an innovative idea that has appeal to mass markets, again, the potential for dynamic growth is there, and they're looking for that. But the other things that they're looking for are, ideally, if you've done some work to prove the concept up, so a little bit of, you've started the business and had some initial modest success to say, look, my proof of concept is working already. That's a real nice to have, not necessary. But what is critical, and we keep coming back, is to that sound business plan. The venture capital, once you've got through the initial talking to them, and I will cover there, to talk to a venture capitalist, you need to have a good pitch. It's called the elevator pitch. Can I sell my story short and sweet? Because the venture capitalist will want to hear it, and they're pretty good at making an instant decision. Yes, I'm interested, or no, I'm not. You need that pitch really polished, and often it's good to get some professional advice on building what we call the pitch deck. But once you've built the pitch deck, the next thing he's interested in is, show me the business plan. And that needs to be very, very comprehensively thought through and realistic.
Okay, so that sounds... Yeah, go ahead.
I was just going to say, they're the key things that the venture capitalist is looking for. An innovative idea with a really big market, most ideally where you've started to prove up the concept of it by getting the business underway a little bit already, and then a really polished pitch, the story, really polished with the right documentation, PowerPoint slides or similar. You put that together, and then if they're interested, the very next question is, show me your business plan. If it's not ready, you'll lose him straight away.
Okay, so this makes it, what you're saying, like, I'll never be able to get venture capital. I mean, how do I do it? Who can get venture capital? Is it that easy? Is it that possible?
Okay, so who can get venture capital? Typically, the market says only people with a really innovative idea can get venture capital support. At Projects RH and certainly at River Gold Capital, we don't agree with that concept. Anyone who's got a good, sound business plan or business concept, if the pitch is polished and put together properly, can invite venture capital. And there are people who will happily invest in the growth of a traditional business. So anyone with a good business concept can apply for venture capital. What we do recommend, though, is that you come to an organisation like Projects RH, where we can put you in touch with the people who can help you write the business plans, or who can help you build the financial modelling, so that when you talk to the venture capitalist, you've actually got all of the answers to the questions even before they're asked.
Okay. Who regulates venture capital firms?
Okay. So venture capital is regulated in a number of areas, but in short, here in Australia, we have a really good corporate watchdog, the Australian Securities and Investments Commission, and ASIC, as it's called, ASIC, provide all of the rules under which people are allowed to raise money, and indeed the rules under which things like venture capital funds are permitted to operate. For some types of venture capital, they co-regulate with other departments of Australian government, and they even co-regulate with industry associations. So a person who is investing, for example, through a venture capital fund that operates under the what used to be called AVCAL. We can cover that more in more detail, but under an industry association can have several tiers of regulation. The self-regulation of an industry association, the regulation imposed by the Australian Securities and Investment Commission, and perhaps also regulations from other departments in the Australian government, depending on the industry people are in. So it's very heavily regulated, but once again, with the advice of a good consultant, regulation is there to help make people successful. A good consultant can pick your way through the regulation pathways to ensure you comply and to ensure, therefore, your business has the best possible chance of success.
Okay, you're talking about the pathways. What is the venture capital investment decision process? How does that work?
Okay, it's a little bit as we've touched on before. Once a person's decided on the sort of business that they wish to go into, and they've put together a little bit of money to start to get the professional advice that they need, the pathway then really is to determine, first of all, are they just looking to make an investment? Are they looking to run a business? Or are they looking to find an investor to support their business and perhaps to attach a visa application to that? So we have different, if you like, pathways depending on whether somebody wants to invest, is looking for investment, or is looking for investment and a visa.
Okay. And there are different categories of funds also.
Absolutely. So venture capital funds for investors fall into a number of different categories. The two main ones are a venture capital fund, which we call a venture capital limited partnership. These are a complying fund that meets a whole bunch of Australian government regulations. And because of that, the investors enjoy a number of tax advantages. So, for example, if a business grows and becomes very successful and is eventually sold or listed on the stock exchange, there will be a capital gain, a growth in the value of the company. Normally, people pay tax on that growth. But if one is investing through a complying, registered venture capital limited partnership, there is no capital growth tax. Another fund, which it complies with different rules again, is what we call an early stage venture capital limited partnership. It meets slightly different government requirements. And again, the benefits are that even the income of a company, of the investor, is not subject to income tax for that part of the income that relates to their investment in these complying funds. So if the fund is set up and the fund complies with the government rules, there are substantial benefits to the investor.
Okay. You mentioned before AVCAL funds and the Australian Investment Council, or AIC funds. Well, what are they?
Okay. So I'd mentioned before an acronym called AVCAL. AVCAL was an Australian industry self-regulating body. So it was a group of businesses that came together to form a set of standards and rules by which they have each agreed to comply. That organisation has been so successful, it's actually grown substantially and changed its name to be a little simpler as the Australian Investment Council. So they're the same thing. AVCAL and the AIC are the same thing. The Australian Investment Council is the new name because it was originally the Australian Equity and Venture Capital Association Limited, very long handle, but the Australian Investment Council, AIC, is the new name. And they are a body that if people have a fund registered with them, they can be assured it's meeting the government's requirements for compliance, and therefore those funds tend to be the ones that enjoy the best possible taxation benefits, lack of capital gains, and that sort of thing.
Okay, are they the ones who approve a venture capital fund for tax and migration purposes, or have nothing to do with that?
What I will say is that of course, the final approval rests with the Australian Taxation Office. They are the ultimate one. But in fact, if a fund does not comply with the AIC membership requirements, it will not be approved by the Australian Tax Office. So whilst they're not a formal approval authority of the government, unless they have admitted it, you will not get the tax relief.
Okay.
Okay, so it's very important to have an AIC regulated fund.
And who approves it for tax and migration purposes?
So migration purposes, what I will say is if a fund complies with this investment requirements, then the taxation benefits are prescribed in our legislation.
Okay.
So our legislation says if you meet these rules, this is the tax benefit that will be provided. So it's actually, as I say, prescribed in our law. As for immigration, when people work with, and we always recommend that people work with an immigration lawyer or an immigration agent who is licensed to operate in Australia, and we're happy to introduce people to ones that we know and trust. They will set up the immigration application on a basis that we know will ultimately be met and approved by our immigration department.
Okay. Do investors get charged fees for investing in venture capital funds? If so, what are the amounts or what can be expected? And you already talked a bit about the incentives and taxes and such like.
Certainly. So again, we've also talked about that there's quite a range of venture capital funds, from specialist venture capital funds that allow, if you like, a single investor or a limited number of investors to invest through the fund into specific projects, perhaps the projects that align with a visa applicant. Those funds tend to be, because we're only raising their relatively small sums of money, $200,000 or $1 million Australian. So the fees of those tend to be in the order of about 2% of whatever's invested, and then an ongoing management fee of 2% per annum. That's at the boutique specialist end of the market. And other people can invest in very large venture capital funds where the investments are spread across literally dozens and dozens of venture capital projects. And those fees can be as little as 0.5% per annum. But usually, and I would say this, usually a good structured venture capital investment in a good project with a good business plan, the investment performance is expected to be quite strong. It's not trying to get, these investors are not looking for a 2 or 3 or 4% return. They're looking for a 20 or 30% return over time. So to pay a fee of even 2% per annum out of a 20 or 30% return is not a big fee to pay.
Okay. What information will you have to provide about your company to a VC investor? What do they need to know?
Again, the investment the information that's required for the investment will depend very much on which type of VC fund we're looking at. So if I may illustrate, because one I think that might be of interest to many of your listeners is in fact that investment that may be made by friends, family, other business people that are known to them into a boutique investment fund that's going to invest into their business idea to help them get a visa. This is a common scenario. Now, the information that boutique investment fund is going to look for is nothing more than we've discussed already. They will want to see a really good polished pitch deck. So, a polished little presentation that's the business idea in a nutshell. Once they're happy that meets their investment requirements, that it meets the government's requirements for early stage venture capital, they'll then ask for a good business plan. And those organisations, because they're boutique, they'll actually sit down with the investor, they'll sit down with the visa applicant, and form a bit of a team and try and put this together so that the applicant can get their visa requirements, they can build the business that they want to build. The investor, because they know the applicant or they like the applicant's business idea, can be part of that team to decide together what are our performance returns, what are our expectations. And the investment fund will make sure that it complies with all of the government requirements so that all of the taxation benefits can be achieved. And importantly, we'll also overview the business plan to make sure that it has a high probability of success. That boutique working together approach is one that we strongly support, because it means everybody is targeting to work as a win-win team. It's not trying to pitch somebody against somebody else, as is so common in business nowadays. This is trying to work together to get a great result for the investor, for the visa, and the fund manager loves it because he's building a business and generating a reasonable and fair fee for it.
Okay, we're talking, it is a risk, and it's a risk for both sides of the equation. And what happens if you get venture capital funding, but later you find out that you can't meet the original terms you agreed to, or did not approve the immigration process, so the project cannot proceed? What happens then?
Okay, well, look, again, we break that into two parts, if I may. The first one is that if the enterprise, the business, doesn't meet the expectations that are set out, one of the things that we do is work very closely with the investors and with the applicant to make sure that both know that not every business is a success. So a beauty, as we said at the beginning of the venture capital, is that the investor understands that if the applicant has followed their business plan, the business should succeed. But if it doesn't, there is no comeback on the applicant. It's unfortunately a lost investment. That's the risk of venture capital. But it does mean that the person who's trying to build the business is not left with a big legacy or debt around their neck. They can get on with life. So we make sure that we have very clear shareholder agreements, that we understand that the articles of association of the company properly describe what will happen in those circumstances. So if things don't work out the way it's planned, everybody understands at the beginning very clearly what's going to happen at the end. Okay. Now, that's different to if a visa applicant does apply for their visa and does not succeed in their visa. So we usually, again, work with people to say, let's get the investment up and running so the government can see the money is definitely there, but we can put a condition of the placement of the money in the business that the visa must be approved. So the money's in the fund, but it can stay cash at bank until the visa process is completed or well advanced. And we can just make sure that if things don't work out and the visa doesn't proceed for unforeseen reasons, that the investor has the right to say to the fund manager, look, apart from your setup fees, I want to withdraw all of the money because what we plan to do can't be done.
Can the project go on without the migration process, the business side of, or it has to be undone?
Look, again, that entirely depends on the investor and the person who wishes to set up the business. The person who wishes to set up the business may be very happy that the business continues to be set up, even though they don't have a business visa in Australia. They may in fact apply for another form of visa that they may be entitled to and can still go ahead and run the business. So they may be entitled under, Australia has many visa opportunities for people, not just business visas. But a business visa is straightforward, it's clear, it's a great pathway to permanent residency in Australia. So we suggest start there, and we work together to make it successful, and we plan so that people know exactly what will happen if for some reason it's not successful. Nobody's left with a surprise at the last minute.
Can applicants have properties or other assets in their country of origin, and do they serve as monetary support for the project?
That's again, you've got some good questions. What I will say is the short answer is yes. If somebody has assets, so for example, if they are in Latin America or Asia or Africa, Europe, and they have real estate assets in those countries, of course, those real estate assets could be used, for example, for some borrowing that would allow them to get their initial seed capital so that they could come in. They may also come in with the venture capital investor and say, look, the venture capital investor may say, look, I'm interested, I like the idea, but it's just too much risk. So somebody may say, well, look, to help offset your risk, what about if I put a charge over my assets in Latin America so that if I don't do what I promised to do, you have at least some security? And these sorts of arrangements are quite common and quite proper. They need to be documented. They need to be legally binding. But yes, having some assets offshore can truly be used to help somebody get a business going here in Australia.
We can obtain a permit to request permanent residence after 2 years, right? Why is it important to show that companies make a profit and the relationship between those two?
Okay. I'll answer the question, and then if I may, I'll expand on it a little bit. So we've talked about the 2-year model for starting to apply for permanent residency. The period that you can apply for permanent residency does depend a little bit on which business visa you apply for. But as a general rule, let's illustrate with 2 years. So we imagine that let's go out 2 years and say that somebody has taken some investment and then not followed the business plan and not tried to make the business successful and is now out of money, unable to pay their accommodation, their house, their rent, they can't put fuel in the car. And now they come to the Australian government and say, can I have permanent residency, please? The Australian government's going to say, well, look, the very first thing that will happen is you'll become a burden on the Australian community because you will need support for wages, you will need support for health, you'll need support for food, and so the application is not very likely to be successful. If, however, they have worked diligently in the business and it's starting to show nice profit improvement, the Australian government in the immigration visas can say, look, here's somebody who's shown they're committed to Australia, they're working honestly, they're working lawfully, the business is beginning to succeed nicely, we can see great potential for this person. This is what we want a business visa for, this is what we want in our permanent residence in Australia.
Okay, that makes sense. So we talked about the things of this process and the information that people are gonna require to get into a venture capital fund, but what are the documents that you need to seek venture capital per se?
Okay, look, the main documents, and we've sort of touched on them before, is to make sure that you have got put together a nice summary document. We call it the pitch, but that can be in the form of a visually powerful little PowerPoint. It could be in the form of a great little business synopsis, a summary document. That's document number one. You then also need to have, and I'll say as much documentation as you can get, depending on the industry that you wish to go into, maybe some documentation that illustrates what's in the industry already in terms of who are your competitors. So we're starting to say, have you put together a little bit of an analysis of your marketplace? In business, that's often called a SWOT analysis, to say, can we start to look at what are our areas of specialization and what are our opportunities and what are the threats to our business? So a document like that, and it can be built into the business plan. And a good business plan will have that sort of market evaluation put in it. So again, we come back to that have a really good business plan. The other documentation that you need is a full financial model. So a business plan will typically have a projected profit and loss, a projected balance sheet of what the company might look like, but the actual financial model would usually be a separate document. So we suggest have a financial model as well, so that the venture capitalist can see you've really thought this through. You know what you want to do. You know that it's got growth potential. You know you've got a good market, and you're demonstrating that. That's in the documentation that you're presenting. Does that make sense?
Yes, it makes sense. And it also, for example, brings up another question. It's a lot of information. It's a lot of work. And maybe I have an idea and a purpose, but maybe don't know how to get it through. Who can help me prepare an application for venture capital or to a venture capital fund?
Thank you. Well, look, I'm going to thank you very much for that question, because there are a couple of companies in Australia that provide that service, but very clearly one that I'm very proud to work with is Projects RH. Projects RH can coordinate the specialists in all of those areas and introduce clients to, for example, you mentioned earlier that you had in an earlier Facebook Live, there was a discussion with a company that provides business plans. Mm-hmm. Business plans are provided by many, many companies. But we know the company that was promoted in that Facebook Live, they provide comprehensive plans that are well constructed, that are covering all of the key elements that are required. So we know that if you work with them, the money that you're investing in their fees is going to provide you with a good quality document, as opposed to getting something online where it may or may not be a worthwhile document, but it will definitely cost you money. So Projects RH would be my short answer, as the one-stop shop to put together all of the specialists that are needed.
Yeah, because we also work with migration professionals, and like the whole process is very carefully guarded to meet all the standards.
Absolutely. And so introductions to lawyers, introductions to, if it needs specialist tax accountants because of a unique or special or exciting area of innovation, all of those professionals are introduced to people. They're not compulsory. People can choose their own. People can elect to have their own immigration lawyer, but we're happy to introduce through Projects RH people we know will do the job.
Okay. Why are the Australians so famous, or why is Australia so famous in venture capital fund management? What makes them so good at it? Why are they so big? You.
Thanks. What I would say is that Australia has been, since our very establishment, a nation of innovation. We have a really proud record of the inventions and innovations. We're talking today using Wi-Fi. Our ability to communicate across continents is an Australian invention. When people travel, we travel and we land in aeroplanes that land safely at airports. The landing systems, the radar system, an Australian invention. We have technologies, so we've learnt over our short history as a country, we had to innovate to survive. We've also learnt all of the ways that we make mistakes. We've learnt that the hard way. So now we have several hundred years of history of people making investments that have failed. We now know how to make investments, and we have for many years developed a skill in being able to carefully evaluate businesses that have the ability to succeed. And we can even help people who have a basic concept and help them develop that into a successful business model. This is something we've been doing now for decades here in Australia, and I think worldwide have a reputation for being able to help people do that. But there is a second part to it. Not only have we done it through innovation and creation and investment management, most importantly, we've got a really strong regulatory environment here. Our government's laws have been built to protect investors. We have, as I say, the Australian Securities Investment Commission exists to make sure that corporations, businesses run ethically, that they run lawfully, that they run the way that people expect, that the information is disclosed properly. So our laws for business are, I think, envied by many countries around the world. Many investors around the world are happy to look at Australia because it's a safe economy with great laws and deep experience in innovation investment.
Okay, anything else? Closing words?
Look, I would just like to further say, we really look forward as a nation to finding people who, and we say, want to have a fair go, that they want to get involved in Australia and help build our country. We have a fantastic country. We have a stable, safe place to live. It's one of the most multiculturally diverse countries on earth. We welcome immigration in this country from people who want to come and work honestly and diligently and help build a business. This is why we have venture capital funds here, or why we encourage people to come and talk to us about their business idea. So if you have a bit of a business idea, why not make an inquiry? Because we'd love to see, can we turn that into perhaps a whole lifestyle pathway? Come to Australia, invest here, apply for a visa here, come and join this great nation. We'd love you to see you.
Thank you, Graham, for joining us today.
You're welcome. Look forward to talking again soon. All the best.
Okay. And to you, thank you for watching us and participating. And if you have any questions, you can contact us through the Facebook page. And you can also look us in our website and at our info at projectrh.com.au. And that's next Tuesday for Latin America, next Wednesday in Australia. You're all invited to our next Facebook Live session. We will be talking about business visas. We have another special guest, Juan Guillermo Rincon from RC Australian Migration. So thanks for stopping by. See you next time.